If you had to break down a QSR industry, how are you breaking it down in your head?
High involvement products, Indians will not trust non-brand. What is a high involvement product? Something you put on your face or put into your stomach.
In case of India, Domino's is the dominant brand in pizza. Pizza Hut has not been able to crack the code to that extent.
Whenever the frequency of buying is going up, fashionability of the incremental design element will go up.
So what are the three most important sub-segments under consumer discretionary as you see today that is growing really fast in India?
So durables will be one, jewelry is a big sector, QSR would be another big, apparel and footwear, liquor and the whole alcoholic beverages, home improvement which is paints and some of the other related products.
When you are in a local market, you understand the local preference a lot better. Larger companies find it that much tougher to adjust the model. Now this we have been seeing from the time when, Gadi detergent came about and attacked something like levers. There will always be a local player who understands the micro market much better.
Will you keep ordering in future? Has it become a need or a pattern which you are going to rely on?
People trust other consumers. I trust them more than the government certification on the product. Because now on a platform, if 300 people have bought this cream and the girls have put a 5-star rating on it, I don't now see a risk in buying it.
If you have income level, then a person in Raipur has the same aspiration as a person in Mumbai.
Wherever you are not sure who's the victor, you back the platform. Because a lot of apps think they are platforms, but they are not. The reason I say that is because a platform inherently has one quality, which is...
Hi, my name is Shashank Udupa and welcome to HDFC SKY presents Make Money Matter. Now our podcast has got financial experts who will talk about insightful information about different industries in the stock market, and after listening to this podcast, you will be the smartest guy in any room. Now you won't find any podcast like this which has so much depth of information, and this podcast will actually make you one of the most informed investors. So today I want to deep dive into the consumer discretionary space. But before I go into that, I first want to understand what what comes under consumer discretionary and why is it so important in India?
I think I was explaining this to my 9-year-old. The classic needs and wants.
Okay,
so look, it's not that simple, but at the same point in time, things which you have, the discretionary is like, just like the English word, right? Discretion. Do you really need it? The answer is probably not. Then it goes into discretionary. And to a large extent, the other way to look at it, it is not something that you would use on a daily basis.
Okay.
So the way in which we look at the discretionary space, and it's fascinating because I remember when I joined the market, in fact, back in the day when I used to service this dude, at that point in time, there were like 5 staples companies worth investing in and probably, 3 discretionary companies worth investing in. And there was a little bit of other things in there. But the investable universe of consumer has grown so much with the increase in GDP, and then the quality of the companies has grown. Then there are staples who have a discretionary element to them. So, Marico also has, high-end products, which health conscious high-end products, for example.
Yeah.
So there is all of that, but broadly speaking, if you put it into context, the subsectors that we are looking at is things like, the durables, for example.
Consumer durables. Okay.
Consumer durables, QSR, for example.
Okay.
So food would be a need, but do you really need to go to
Give me an example of consumer durables. Is it like your ACs and fans?
Yeah.
AC, ACs, televisions, washing machines, all of this.
Okay. Oh, that has actually done really well in the past few years, right? But we have seen an uptick of this. Is it because of disposable? Does it all come through disposable income? Is it linked to that kind of an economic trigger?
So see, basically the crux of consumer discretionary is that as per capita incomes keep rising, right? First $2,000, effectively the rule of thumb is that first $2,000 goes into essentials.
Okay.
When we look at per capita income. And we have seen this phenomena globally and it's playing out in India also. Once per capita income of a country goes above $2,000 per capita, then the consumption of discretionary products as well as services tend to increase exponentially. Because incrementally, you won't be spending that much on your basic essentials like grocery or FMCG products. So suppose you had an income of 1 lakh. It would go towards your rental, it would go towards your, conveyance expenses, utility bills, grocery. You would be left with maybe 10,000 rupees, right? To spend on eating out, on going and watching movies, or buying some durables. But if your income goes to 2 lakh, your grocery bill, your utility bill, these will not move up materially. They will move up marginally, but not materially. The incrementally, you would either go and spend on stuff like luxury goods, holidays, eating out, apparel, fancy footwear, buying some fancy gadgets, mobile phones, those kind of things, or even services, maybe going to a spa, going on a vacation, those kind of things. So, or it would go into savings. So as per capita income increases, your consumer discretionary and savings, which is effectively businesses like mutual funds, or other alternate funds.
AMC houses.
Basically, you will have more surplus with you, which you will either go and invest or you go and spend. So consumer discretionary caters to all of these segments.
Okay. Now, this is very vast, right? Because if you're saying consumer spending is, obviously it's gone up in the last few years immensely, right? But there are multiple different facets to it, right? One is, as you said, electronics, and there is apparel, which we're seeing a few. Then there is food, there's going out, there's tourism, there's flying. Now, is there a way to track this? Like, how, if you are tracking such a sector, how do you know where this money is flowing? Like, how do you identify? Is there a bucket that you put? Ki itna, from an average Joe perspective, we've seen so much goes here, this much percentage is going here. How do you track it?
So see, there are, again, as I said, there are global sort of data available on this, that countries with different per capita incomes, how their spending patterns are. Something called as their wallet spends or share of wallet for each category.
Yes.
So for a poor country which has only $1,000 per capita, your food would be 60% of your consumption basket.
Whether it's home, outside, everything included.
For them, outside is very
Outside
minimal.
is limited.
Right?
No, in fact, even in India, if you look at the CPI, 45% is food.
Okay.
But for a country as developed as US, basic food would be only 15%. Yeah. For them, apparel would be 5%, eating out would be 5%. So that your share of wallet is a function of your income level.
Okay.
If you, as I was saying, if you were to analyze your income, your spending as a percentage of wallet versus a poor person's, spending as a percentage of wallet, it would be very different in terms of where they spend. So there is a lot of data which comes out even in India in terms of NSSO surveys and all, which tells how exactly a urban household or a rural household is consuming.
Wow.
And you tend to track that, okay, these are the categories which are growing above GDP.
Yeah.
And these are growing below GDP. Multiplier.
So what are the three most important things under sectors or sub-segments under consumer discretionary as you see today that is growing really fast in India?
So durables is one, because again the ownership is, penetration level of a product is another variable which we tend to track very closely. Something like FMCG is 90% penetrated, which means 90% of the households are already consuming those products in India. Something like an AC, despite whatever growth, it's still say maybe 5% penetrated, which means only 5% of households have ACs today.
So there is a
so
scope.
that there is that much headroom. Does not mean that it will go to 100%. It's not a necessity like your grocery that it will go to 100%.
Yeah.
But can ACs go to 20-25%? And you have enough examples in other countries where do some of these categories tend to stabilize. So durables will be one big. QSR would be another big. In India, jewelry is a big sector, which is again consumer discretionary, which is not the case in every other country, but in India, jewelry is fairly big. Then your apparel and footwear is another segment.
Okay.
And then even some of the other, liquor and the whole alcoholic beverages is also consumer discretionary in a way. So, and even something like, home improvement, which is paints and some of the other related products. So these all are some of the large segments of consumer discretionary.
But this is very hard to also understand more deeply. I'll tell you why. I'll take your example of QSR, right? And I know you guys have made this report on QSR as well, which is a sector thematic report. And here you've tracked different companies like Sapphire Foods, Pizza Hut, Devyani, Barbecue Nation. Now, this you are assuming that people are going out a lot and eating, which is happening in today's market. We are going out and eating. But how do you project this as a sustainable thing, right? Is it like a current trend or a future trend? We don't know. Maybe now I'm doing it. Will I do it for the next 5 years, 7 years? So how, if you had to break down a QSR industry, how are you breaking it down in your head? How do you look at because I only look at the P&L, I look at balance sheet. That's it, right? And we say, oh, it's ka growth chal raha hai and people are eating out, so theek hai. But how does a fund manager look at it? How do you look at it from a fund level?
So see, so something like QSR, now again, this is a fairly established business model globally, right? So the starting point is again penetration. That how many households are already going and eating out, and what is the headroom available for growth.
So can you take with an example of a company?
Yeah. So say in case of QSR, at an aggregate level, at an industry level, in India, the eating out frequency is around 6 to 7 meals in a month.
6 to 7 meals in a month.
Yeah, and that's also for the relevant population. I'm not talking about like in India, not the entire population. The same number in some of the other countries, most of the developing and developed countries, is upward of 15.
So we're going there. Is it a rising trend that you're seeing?
Yeah. So in India also, this number used to be 3 to 4 times, which has gone to 6 to 7 times.
Interesting.
So basically, as I said, once the penetration increases, that means, and the frequency of going out also is a function, right? So it's the number of households which have started going out, and then the same household, is he going now 5 times in a month or 2 times in a month compared to the past? So first of all, a household which never used to go out will start going once, then they will increase the frequency.
Got it.
So number of new households which have started going out and the frequency of going out, that will determine the industry potential, growth potential. So in this report also, we looked at that city-wise, that in terms of what is the per capita income in each city, what is the number of stores of each format in each city.
Okay.
And we mapped it against income levels in terms of where the potential could be in terms of the spending.
Like a growth in spending potential.
Yeah. So we looked at Mumbai and Delhi have so many outlets. So total QSR has say 700 outlets in Mumbai. If I add up all the main brands, right? And Mumbai has so much population in terms of this income bracket. Because we have seen that most of these patterns, it's a function of income rather than the geography. If you have income level, then a person in Raipur has the same aspiration as a person in Mumbai.
Correct.
So if Raipur today has only that much population base which can afford these products, and if per capita incomes out there are going to rise, then what is the potential of number of stores which could open up in Raipur?
Okay.
So on that basis, you figure out the potential for a particular industry.
Okay.
Other way to look at it simplistically is you look at how these companies are kind of growing over the years. So say GDP growth has been 6 to 7%, but this sector has been growing at say 12 to 13%, which means that they are growing at almost 2x the GDP, right? So that's the multiplier then you tend to use. And you look at that in other countries when they were in this phase in terms of GDP, what was the multiplier which was there? So in this, we have done extensive analysis in this report on how China evolved in QSR industry. That at what per capita income level, how many stores they had per million population and how that number changed. So even till today, when China is like, 4x our GDP per capita, even today the penetration is increasing for QSR brands out there. Now, which brand is a separate thing.
Correct.
First of all, you have to analyze at an industry level whether it is a growth industry or not.
Understood.
Then you get to a store level,
Okay.
or a brand level, right? That whether McDonald's will win or Domino's will win or Pizza Hut will win.
Correct. That is the toughest question.
Right?
I mean, that is a tough question.
So then there are two elements to it. One is consumer preference. Which brand are consumer gravitating more towards? So in case of India, Domino's is the dominant brand in pizza. Pizza Hut has not been able to crack the code to that extent. So Domino's has a 70% market share of the pizza market. And they are a delivery format globally. They are one of the best companies in terms of delivery pizza. So wherever in India, delivery is better suited because of the logistics and the traffic issues. People don't want to step out. So delivery will remain the dominant format. So that gave Domino's a reason to be more successful than Pizza Hut in India, right? And then you see that, okay, so Domino's does 3 crore per outlet in terms of sales, whereas for Pizza Hut, the same number is lower, much lower. Now, once you have that issue, the profitability of every Domino's store will be much better. right? Compared to because the costs are fixed.
Yeah.
A large part of costs are fixed, where your electricity, your staff and everything. So a profitability per store of a Domino's will be much superior to a Pizza Hut in India. And then therefore that will give them Domino's a greater power to add new stores. So we tend to look at in consumer discretionary or retail businesses a concept called as unit economics. That on a per store basis, what is the profit that this company is making? And if the unit economics are good, then you can go and open as many stores as you want. Because on a per store basis, you are making money. So your ability to replicate that in a cookie cutter way and expand to stores is easy.
Okay.
But you will see that most of these businesses falter when the unit economics are not good and they try to expand. Because then you would start making losses on every new store you are opening.
Got it.
So consumer acceptance of a certain brand that, okay, Subway, whether Subway is doing well in India or Burger King is doing better versus McDonald's. So those are consumer trends which you have to pick, that where are consumers gravitating towards. And with that sort of a consumer preference, what is the unit economics of a store? And then on that unit economics, how scalable is the opportunity? That Domino's today is in 300 cities. Can it go to 600 cities? How many cities in India have that population base which can afford a Domino's pizza? So that is the growth potential of Domino's versus some other brand where the price point is much higher. If there is a pizza brand which sells for 1,000 rupee, right? Then the number of population which can afford that is that much smaller.
Got it.
Right? So then the store potential for that brand would be much lesser. So it's also the price value equation. What is the addressable population for a particular brand? And then, you derive the unit economics for that addressable population, and then you see the potential of a particular brand.
Very interesting.
I think there is also one more thing. Look, in India, given the diversity of population which he alluded to, there was also a rural report which these guys had written in the strategy team. You look at the 650 districts of India, each one of them is a different country. The good thing is that there is enough data available for you to get a hang of what the population is and what the income levels are, which gives you a broad sense. And when you map it against, our retail analyst, Jay, he does a lot of this type of work. He maps that against actually what are the store presence of the various different formats in there.
Okay.
To give you a sense as to very, very micro market wise where there would be potential to grow. So you actually have to, there are places where you don't want to go at all, for example. And then there will be places where you think that there is a lot of growth potential. Now, in India, apart from, Jubilant, which is basically a pan-India player, they will continuously be attacked from locals. Now, this we have been seeing from the time when, Gadi detergent came about or Nirma detergent came about and attacked something like levers. There will always be a local player who understands the micro market much better.
This we have noticed because I think even in Mumbai there are so many new pizza and burger outlets that have come that have actually done really well, right? Joey's, Eva's, and there's so many of them that have come.
Northwest India, there is a brand called Lapinos, for example.
Yes.
Okay, so now it's not even listed.
Yeah.
But if you look at the way in which they've been able to penetrate, see what happens is
Does
just
that affect the QSR? I mean,
of course.
obviously, right? Market share goes away.
Yeah.
No, see, they relate better. The other is that if you look at when McDonald's entered India as well, at a pan-India level, it is a simpler example because they took a while to get their delivery model right, for example, because they were not delivering anywhere in the world. But seeing the example of, in a sense, if you look at the Jubilant example versus Pizza Hut, which is what he was talking about, they realized that delivery will be required. So they had to invent that. But someone else was already doing it. Maybe the product was not up to the mark. Also, what happens is that when you are in a local market, you understand the local preference a lot better. Larger companies find it that much tougher to adjust the model.
Yeah.
See, not because they don't understand it. The problem, the issue is that large companies are large because they are standardized. Okay, that's a strength. But in a micro market, in a QSR format, it can become a weakness.
But aren't people adapting? Because I know McDonald's has different menus in each country.
Yeah,
They
they
are.
are.
Even
but,
Domino's for
But
that.
it will still take that much longer.
Lag time is there,
okay,
yes.
they'll have to go back to head office, check and come back while someone else has moved. So, of course, they are also distributing their costs over larger. So there are strengths and weaknesses on both sides. But broadly, what I'm trying to say is that the first is that what is also your local micro market competition, especially in the profitable geographies.
Understood.
Where The other is that, and which he was talking about, is that one is the unit economics, which allows you to scale. But in a classic retail format, and so also for QSR, the element of actually growth in the revenue is twofold. One is how many stores can you add? So if you have 100 stores, can you get to 150, which is 50% growth? Of course, they will take time to scale up and all that, but let's say that. The other is how much does that existing store grow, which is the same store sales growth.
Same store revenue.
Which is very consistent across all retail formats. That is interestingly related to what he was saying about the price value equation. It is in fact interestingly in our Jubilant report, we have talked about the fact that, can you innovate? Are you rolling out offers where people are, want to have more of your product? So one is the underlying trend of somebody eating more. A family stepping out twice a month or ordering in twice a month versus now 4 times a month. That is one. But the other is how do you extract more out of that? Can you sell more to the same person? Can I sell a cheese burst pizza? Okay, instead of just having a regular pizza, can you upgrade the offering to have enough, enough churn happening in the product portfolio in your value equation?
Okay.
Now, I'll tell you why it matters. What has happened is that there was one very interesting study I was reading about the United States, where this is last quarter results, McDonald's saw a dip in, now that the tail off from the payments, from COVID payments have started to happen, at the bottom end, McDonald's started to see a dip in sales. But actually, Chipotle saw a growth in sales, even though Chipotle is more expensive. Now, why would that have happened is because of the price value equation. It is not a price element anymore. So, which he was talking about, that it's not just the price, it's also about what you get for the price. Now, if people are eating out less, they want to have a better meal. Okay. They want to try out something new which may have been advertised.
Yeah.
And I think that one thing that in QSR, which is a very, very difficult one to predict, and that is what, you try to keep basically doing channel checks to understand is that, and this is something that, one of the unlisted company promoter was telling me, that what is the difference between, when the new CEO took over at Jubilant was the fact that they seem to have lost focus on the quality. So what happens is that in a hyperinflationary environment, which we faced twice now in the last 5 years, there have been 2 times when the first thing you do is you pull back quality a little bit to keep the price equation right. $499 becomes an important price point, for example. So you need to hold $499. If costs go up, you take away quality a little bit. But at one point in time, what happens is that it takes away so much of your quality that the customer starts to feel and sales start to dip.
Wow. Okay.
Okay. So what happens is that the one most difficult one to actually monitor is the fact that will same-store sales growth and continuous ordering keep happening or not? And for that, 2 things. One is promotions and the other is whether the quality of the product and a new innovative product has been brought in at that price point or not.
So this is very interesting because I want to draw parallels now. Okay. So you said it's difficult for same store growth to happen, right? Basically their AOV is maybe stuck or something like that, right? Now, if you compare it to the new age data that we have seen, the online food ordering companies, and they release their stuff, right? There we see a rising AOV, which has almost doubled in the last 4 quarters, right? I think from 350 now it's around 650. So it shows that people are, and also they have data of how many times people are ordering, which is also increasing, and the number of customers that are ordering online is also increasing.
Yeah.
So is it that for legacy businesses like Jubilant and Hardcastle, which is McDonald's, is it tough for them to compete in a market where options now are so many, right? Because now if I have to order something and I'm ordering at 600, 700 AOV, right? Or even an average of 500, that is still more than a pizza, right? So why is that stalling? Whereas, is it going into the unrecognized market or the unregulated market?
So see, the
unorganized market.
So fragmentation is a sort of a dominant trend in consumption everywhere. Like,
But
so
has it like, is it like growing?
So
across categories.
Fragmentation in the sense that more and more players will come, more and more options will come. And therefore a single dominant player, like the percentage market share will keep coming down, though he will be growing as well. But market will grow at 10, he will grow at 7. And somebody else who is smaller will grow at, 15 to 20%. So that's why in some of these categories, if you are unable to bet on a single player, then you are better off owning a platform.
So is it better
because you are sure that eating out will go up in India, but you don't know which brand will benefit. So you go and buy the platform.
Who's facilitating that?
Right. Similarly, in durables, you know that ACs will go will be selling, but you don't know whether it will be Voltas or Hitachi.
Correct.
So you go and buy Bajaj Finance, which is a consumer durable financing play, because
Wow.
it will finance everyone.
Wow.
Right? So sometimes it is better in consumer businesses because market share becomes a very important.
Yes.
The most important factor to track in consumer sector is market share.
Market share.
That, and where, like, in terms of, and not absolute market share, the market share movement.
This is like proxy investing, what you're saying,
Yeah.
right? Okay.
So market share, the direction of market share movement, whether a company is gaining market share or losing market share, that tends to make a huge difference. And therefore, sometimes instead of being able to bet on a particular company, you might be able to bet on a category. You know that eating out is going up. You know that going out and watching a movie is going up. Now in movie, fortunately, there are not too many players. Only PVR is there. But say some other category that you know that jewelry is going up, but you don't know whether people will go to Titan or some other sort of a brand. So then you try and play it through the proxy, which is either a platform or in something like, a financing business on the same category.
I think we're seeing that with, I think jewelry, there's a lot of big players now entering the space because they've seen the scope of growth.
Yeah.
I think even in fashion, people are doubling down with 2-3 companies that are doing heavy store expansion that's been happening constantly, right? Now, I've touched upon the new age companies, so I want to expand a little bit more on that. Now, when you talk about new companies that have come with recent IPOs after the COVID thing, right? We saw Nykaa, then we have Policy Bazaar, we have Zomato. No, these guys are not asset-backed companies. They're pure platform plays, playing on the fact that it is an aggregation play where there are users coming in and they're selling services, right? Now, how do you, because the valuation and understanding this business, abhi stored nahi hai, expansion aisa nahi hai, there's no any hard asset backed into it. I would also argue that there is not a very strong moat which is not disruptible very soon. Right, one of the big players comes tomorrow, disrupt ho sakta hai. So how do you analyze these new age companies that are coming? Even if it's Nykaa, we saw Tira coming in. If you talk about Zomato, we have Swiggy, and then if you have quick commerce that has now become Blinkit, Swiggy, I think now Big Basket has now pivoted into it as of recently, right? So how do you analyze this? Like how do you make sense of new age startups? And is it worth looking at it?
Yeah. So see, these are clearly great business models, and they are serving a need and solving a sort of a consumer need, right? So from that perspective, is the concept here to, first of all, you have to realize whether this concept is here to stay or is it a fad.
Like a substitution.
So,
Will I go out and eat
exactly
versus...
So
okay.
will you keep ordering in future? Has it become a need or a pattern which you are gonna rely on, right? So if the answer is yes, which seems to be the case, that say online cosmetics, be it Nykaa, or say online food delivery, these or quick commerce, all of these are, I think, now well ingrained sort of habits which are going to stay. Or say e-commerce, which is Amazon, Flipkart and all.
Yes.
These are going to stay here. Then you have to look at then the level of competition which is there. For that, you have to look at what is the moat of this business and how much is it earning? How much is it leaving on the table for somebody else to enter? And what is the moat? That what is the differentiator? If it is only capital, then there are enough guys who can come in and disrupt, right? But something like online food delivery, it's an extremely tough business. Does not have very high margins for anybody new to come in and enter, and extremely complicated sort of it's more of a supply chain business rather than a consumer business.
Okay.
Like, how you manage the back end in terms of being able to, similarly quick commerce, how are you able to deliver in 10 to 15 minutes?
And be profitable at the same time.
Jubilant again is more of a supply chain operational excellence business rather than selling a pizza business. That in whichever part of the city you are in, how do you deliver in 20 minutes?
It's a logistics
now,
company, actually.
And there is a reason why nobody else is able to crack that code then, right? So you have to look at that, what is the moat and is it replicable? So today, what Zomato and Swiggy and all have built is not easy for anybody else to come and replicate, both from a logistics perspective, plus there is not that much, on a per order basis, they are not making that much money.
Yeah.
It's only now, once they have got that much scale in terms of number of orders, that they have started becoming profitable. Whereas when you look at something like cosmetics, the average order value is much higher. The gross margins are much higher.
Yes.
So the profit pool is much higher right from the beginning. And which is why it will always attract more competition compared to
Same with jewelry then.
Yeah.
Same with textile also. I mean,
Yeah, but again, there are different nuances. We'll come to that. But in case of say in case of online cosmetics, it would always remain a bit more competitive. Again, as a category, it would remain. I think the need will there is a genuine need which needs to be served in that particular fashion. But the level of competition will be high.
Got it.
And then you see that whether what is the mode. In case of Nike, it is the aggregation of the number of brands that they have got, right? In case of cosmetics, it is the variety which becomes more important than anything else. And they have a inventory-led model out there now, which is difficult to replicate. So there are certain modes. Then you need to see whether how much are those modes,
Strong or not.
strong enough to be used by others. So similarly, quick commerce is something where it's a operational and logistics supply chain game. The number of the warehouses and all that you can open is a function of the customer base. So therefore, if you see, all the successful quick commerce guys are generally those who have some other business, be it Blinkit, through which they are getting a certain number of footfalls and orders and all, and then they are leveraging that through quick commerce as well.
Yeah.
So that way you have to look at each business in terms of the business model, what is the mode, whether it is replicable. If the mode is only capital, it would be eaten away by somebody. But if it is genuinely difficult to create another Zomato or another Nike, then you know that the business is here to stay.
So
then
at
you
HDFC,
look at
you're tracking consumer discretionary quite actively, right?
Yeah.
So if I had to ask one of each of you all, one sub-segment, what would you bet on with India's growth for the next 5 to 10 years? If you had to bet on one sub-segment, not talking about stocks, just sub-segment.
I think footwear. I think
Very interesting.
I would say QSR.
I have a very different view.
QSR for food out. You're saying the pattern will increase more and more. Why footwear? This is I want to understand.
Yeah, no, I have a very different view on this. And I think it's not if I may use the term, very sexy sector. Generally,
That is why I'm
people
asking
don't want
why.
to.
Yeah.
But see, there are 2 or 3 things. One is that I think that as income levels go up, right, as with all other discretionary, the underlying upgrade cycle is there. The other is that footwear incrementally is more and more being seen as part of fashion. If you look at the underlying data, the number of pairs of footwear that someone owns and the cycle is actually going up. This was there in Jay's report originally when he had written this was a while ago. And if you look at what happened in China, what actually happened there, and honestly, this is when I used to still be a consumer analyst, and there was a company called Anta. You can have a global player. So, like in any other category, what happens is that you trust a global company at the start. Because you know a certain quality will be delivered to you. You know if they say that this has some spring, then it actually has it. Okay, over a period of time, what happens is that, and this is true even for platform companies, and I'll talk about that separately. What happens is that the consumer trust starts to grow. Now what happens is I believe that local companies understand Indian taste better. And they will quickly adjust. The supply chain in that case, whenever the frequency of buying is going up, okay, incrementally the design element goes, the fashionability of the incremental design element will go up. You will want a fresh pair of shoes if you're buying it only 6 months from now. You want it to be the latest design. Otherwise, you buy something which is a little bit more classic, like a black shoe, which enables you to charge a higher price. So the underlying, if you look at campus shoes, for example, okay, what is incrementally happening is that people want better shoes. They want more, they want fresh product. And they want it at a price which has been delivered locally. Because then you can keep the local prices down. You don't have to pay Michael Jordan some royalty or whatever it is. So if you look at that, the ability for you to deliver that for the local product, for the local market is much higher. And billions of dollars of market cap have been created globally with that.
Correct.
So, I'm saying it to stir the pot on purpose.
Yeah.
That it seems like a very interesting sector, which I think has a long way to go.
Also
from
ignored, right?
It's completely ignored. As in, it's
done well, but
it's
yeah,
done well,
it's not-
but it's
not in the sexy, as you said.
something
It's not
which
very
comes top of
attractive.
mind.
Yeah, no, definitely.
But today, you walk into the stores today, you look at even companies like Metro Shoes, for example, which is more an aggregator with a large,
even Bata played
like a house label,
Yeah.
private label with aggregation of other
or Bata, for example, who also has
They
hush
did hush
puppies in
puppies
there.
and the normal
You
one.
can see that the mix has gone up so much as compared to, the designs have become more fresh.
Premiumization and say this penetration increase. When he said India sells around still average ownership is around 1.2, 1.3 pairs per person.
Wow.
Whereas the same number is 4 to 5 times in most of the other parts
And
of
this
the
is
world.
again based on your, see, there's tier 1, tier 2, tier 3. So
Blended. This
is
1.2,
blended.
1.3 is blended.
If
The
you have
number
enough
of-
data, I can track that in tier 1, people have at least 3 to 4
Yeah.
cycles
So
of pairs.
as I
So
said,
anecdotally,
it is not even tier 1. It is a function of your income level. The day your income level is higher, you will have a lifestyle where you will have a product for casual, a footwear for casual, one for sports, one for formal.
Which is happening right now, slowly.
Then
yeah.
you will have a Crocs or something for this thing. So it's a function of income level. So ownership will go up in the sense
Yeah.
of number of pairs per person, and premiumization will go up. So I think most of the consumer discretionary sectors in India still have a huge runway of growth. If you look at
Seems like that,
because
yeah.
the penetration of any of these categories is still very low.
Yeah.
Both penetration and frequency of purchase and all is very low.
And do you believe people are also moving away from brand conscious to brand agnostic right now? Because I know that, at one point Zara, H&M was supposed to be like good entry level. Now we have Zudio and other guys copying Zudio as well that have come and disrupted.
Not only that, I think there is one very big change which has happened. And this one, interestingly, when I came into the market, there was a senior analyst in one of the fund houses who told me that high involvement products, Indians, this is 2004, 5, 6, high involvement products, Indians will not trust non-brand, will not go out of a brand. What is a high involvement product? Basic definition at that point, something you put on your face or put into your stomach.
Interesting.
Okay, simple. As in, there are more nuanced definitions to that, but broadly this. Why? Because they could affect you. Now, why is that important? Is because of the trust factor. Something bad will happen to me. I can't imagine any girl using something on her face which she will want to take a risk.
Of course.
They'll put it on the elbow and do 20 other things, right? And same with food. No mother is ever going to feed something to their kid who there is a potential that something could go wrong, no matter what the price point is. But if you look at what's happened with the platforms, because you were talking about it earlier, is the fact that people have come to the conclusion that, and this was very interestingly brought about by, that unlisted company, MyGlam.
MyGlam,
Why?
yes.
Because I asked this question to MyGlam the first time, I forgot his name, but the first time I met him, that why are people using your product? Something would happen to them, right? So, of course, there are various ways they reach the customer. But more importantly, what has happened is that people trust other consumers.
So it's a peer-reviewed...
It's a peer review thing, right? It's actually, I trust them more than the government certification on the product.
Wow. Okay.
Because now on a platform, if 300 people have bought this cream and the girls have put a five-star rating on it, I don't now see a risk in buying it. That complete disruption of
In
the review.
beauty now it's like all online.
Yeah, and I promise you, ask anyone who is a 20-year-old analyst and they'll all tell you that back in the day, nobody would have imagined that people will move out of Pounds and Lakme and Dove and whatever have you.
I've seen this a lot, right? In fact, the whole skincare where you talk about shampoos, now people are going into scientific shampoos that are new brands just because it's scientific, which is just putting the compound on the package, they start buying it.
Same with food, right? Because now we were talking about platforms just before this.
Yeah.
The reason why you would buy Meraki, for example, I remember it's a local brand, right? But how do you know that? Because 100 people told me that it's fine. I don't know who those 100 people are.
Yeah.
But 97 of them think that it's fine. Right?
Wow.
So
This is true.
The platform has brought you to a point where the brand has become relatively less relevant. It's still relevant.
Yeah.
But it's relatively less relevant. So that attack, how do you prevent that? And which is why I think the point is that platforms can sometimes be more powerful.
So I'll ask you now, I just need from both of you two things. Give me two things that one should look at in a new age business.
See, I believe that platforms, wherever you are not sure who's the victor, you back the platform.
Okay, understood.
Okay. The only thing on the platform that I believe that you need to keep a very close eye on, and that is where it's a platform or not a platform. Because a lot of apps think they are platforms, but they are not. Okay. The reason I say that is because a platform inherently has one quality, which is that the incremental customer cost of delivery is lower than the previous. Why I'm saying this is because unless there is a network effect or a cost effect or a scale effect which helps you deliver that thing at a lower cost, I'm talking about a price value equation. Not just cost, but somehow delivers better value to the customer, someone else can disrupt that very easily.
Understood.
So if today, for example, if I have to deliver a 500 rupee product to you, it does not matter whether it is QSR, whether it's a Zomato or whether it's a Nykaa or whatever have you. If I am delivering a 500 product to you and I'm making 50 rupees, and if I am at 100 million customers and I go to 101 million customers, the incremental 1 million customers should get a better value on aggregate.
Yeah.
Otherwise, that 1 million is going to another platform who's willing to do it for the same price. Otherwise, you can get disrupted very easily.
That's your moat, basically.
That's your moat.
At economies of scale, you build it
the
for
fact
the
that
customer.
I'm big is helping me is the only way a platform succeeds.
So you pass it on to the customer.
Yeah, the value will go to the customer. It may not be in a cost way.
Yes.
It may be because they have because certain brands are forced to participate on the platform. It could be so many different things. It could be because more categories are available on the platform. But the price value equation has to incrementally grow with your scale.
Wonderful.
If it's not growing with your scale, then it's not a platform.
Understood. Very interesting. And what about QSR? Two things that you would track, you should look at.
So one is the same store sales growth, which is
Very interesting.
effectively, that on a per store basis, are you growing? Because the number of new stores that you can add is only that much. Like it's a finite thing. Plus, it is more capital intensive every time you put up a new store. But if the same store is adding more sales, it all flows down to the bottom line. So same store sales growth becomes a very important metric. And second is the store potential, right? Which I was saying that a brand like McDonald's, if McDonald's has only 200 stores today, but the price value equation of McDonald's is great, the brand is very well known globally and in India, right? For some reason, if say McDonald's is still a late entrant and everything, and it has only 200 stores, but some other format, even say it could be Bata, right, which is a footwear company, has 1500 stores in India, and the average, what is the average order value out there versus here, then you can see the store potential. So what is the long-term store potential of a particular brand?
Interesting.
So if today it is 200 stores, but you believe it can go to 2000 stores, then 10x is the growth potential. So you would look at that business differently versus somebody who's already at 1500 stores and he can also go to only 2000 stores. So same store sales growth and the store potential. I think these are the two things which one needs to look at. And
wonderful.
Another thing, how you compare some of the consumer discretionary categories is, certain categories like QSR are great because, there is no working capital. So a lot of times where companies tend to falter in consumer discretionary sector is basically on working capital. That you get your, fashion trends wrong or something and you're stuck with inventory. So typically apparel, footwear, you will see that the failure rates globally are quite high because these are working capital intensive businesses. So that is where the risk is sitting. Individual brand, and that's why you will see in apparel there have been a lot of bankruptcies globally. Very few apparel brands are able to scale up beyond a certain number. By their very nature, it's a fashion category, so people want to buy different brands when they are ordering. If I am wearing Zodiac and you are, and everybody started wearing Zodiac, then I would want to move to something else.
Interesting. So more adoption, more substitution.
Yeah. So that's why certain categories you will see that individual brands are not very big.
Yeah.
But something like QSR is not like that. It's actually the reverse. That the bigger the brand, the more footfalls it attracts and more people trust in it because of the food factor or it's a high involvement product. So the bigger brands keep getting bigger in case of QSR, and there is a negative working capital business. So it throws up cash on a working capital basis.
So if I had to ask you
one
one
thing, if you
thing
have got the consumer, then your probability of being right on a QSR brand is fairly high.
If I had to ask you one thing, what a retail investor should not look at, what would that be? In
case of retail, sometimes we get overly excited with store expansion.
So,
Now you will see again in most of these retail businesses, they tend to fail because of a very aggressive store expansion when unit economics were not right. So that's why I was saying that first, what trend did with Zudio was that first they got the unit economics right on us first 100 stores. So you will see that a lot of these very high quality businesses will first fine tune the model on a 50 to 100 store sort of a model or on a pilot basis. And once they have got the unit economics right, then they will scale it up in a blitz way to 500 stores or something.
okay.
Right? What Zudio did or what Domino's did. But if somebody didn't have good unit economics and they kept expanding because they got some capital externally, right? And then they are stuck.
So inevitable decline. Yeah.
Then that company can go down under. So don't get overly excited by store expansion. Basically focus on the unit economics, which is effectively same store sales. How are the existing stores doing?
Yeah.
And second is, in all consumer businesses are touch and feel, like, you get a sense of which brands are doing well. You can just, if you are, look around, if you see that, like, Zudio was something which you could see. Once you enter a store, you can get a feel that, there is footfalls. The merchandise, the price value equation, they have cracked something which is making people come to the store again and again. So I think in consumption, it's very important for you to experience a particular brand and just observe certain stores at different times of the day and just go and observe.
Awesome, yeah. So I think this has been very, very, very insightful again from a consumer, because consumer discretion is so big, can't understand there are so many things at play. But I think what the key takeaways are from what I've heard from both QSR, New Age, one is that, look at companies that are selling the shovels in a run. So instead of going and trying to find out which is the best TV company or fridge company or whatever that is. And the second thing what you mentioned is very interesting, which is don't get too excited on expansion. Look at the unit economics. And if unit economics works on 10 pilot stores, then if they scale, it is a good bankable, risk-reward ratio is good on that. So I think these are the two key takeaways that I would take from this. Again, thanks a lot, both of you, for this mad insight into the whole consumer discretionary space. So again, thanks a lot for that. Thank you. Yeah. Now, for all the people who love this podcast, I have something very interesting for you. If you are looking for a career in finance, then HDFC Sky is actually offering an internship program mainly for the people who are watching this video. Now, how do you apply? Very simple. Fill out the form that is in the description and also comment today about your take on this entire video. Now, I want you to put all your thought into this and do your research and fill out the form, because I don't want you to miss out on such a beautiful opportunity of doing an internship in one of the biggest security companies in India. And also what you get is crazy amount of knowledge. So don't miss out on this opportunity. We're giving it to you. So it's up to you now to take it.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.